The S&P 500, the Nasdaq 100, that's what we're talking about here on the day. We're going to get right to the point specifically on SPY and Qs, looking at the big breaking points, the big things we've been watching. Now, if we look at yesterday Qs, we're coming back down into that point, that same level, 357, and ultimately we're getting a close right back at that area. But the answers get a little bit more clear when you look at something like SPY. And I'm going to tell you why we bounced today as well, but then ultimately the selling that started to incur. You zoom out just a little bit. We look back here, right? There was two levels we talked about. We talked about those June lows, then we also talked about right here, those August lows right there, right? June 26th, August 18th. Now you finally broke. So there's a difference. We're seeing separation. ES performing worse. The S&P 500, the Nasdaq, kind of where it was at. This, I think, will start to change. And I think the Nasdaq will start catching up, and it can get very ugly. Now, before we get into that content, I have to ask you to do two things. Consider liking, consider subscribing. Helps out the channel tons. Also, too, everyone's been asking, the Discord link is down below. These prices will be changing in the coming months, just to let you know. And basic access will officially be capped very soon as well. You're not going to get signals here and there. You're not going to get rich quick, right? You're going to learn how and why we trade, what we look for in the market, and hopefully get you to the area, get you to the situation so you can trade on your own, hopefully, right? That's where we're at. So again, things to consider, things to be viewing. So you're getting that nice drop there. Now, the first few things I want to talk about. One, the reason why you bounced this morning is particular, right? You can go like something like and honestly, when we look at this bounce, you're going to see just how ugly it was. Okay, so you get this bounce early in the morning, we pop up, we reject off of 434, that kind of level we've been watching. Remember, I've said under 434, we're kind of choppy, bearish. Confirmation really comes below 431, the lows from yesterday. And you kind of got all that. So again, a few things we're looking at here. Okay. Now, overnight, Japan released their rate decision. They left it unchanged. They previously had been raising it every time that's happened. We've seen selling occur. We also saw China loosen up some of their policy as well. So we saw some initial buying. But I think today painted a very important picture. Very important. Needless to say, you had some Fed members talk about some pretty bad statements, okay? I'm not going to sugarcoat it. You had some Fed members say some things that definitely started to pull you in the wrong direction, okay? And a few things to visualize here so you can see. This is on Twitter, but we have these in our news bot. Right now, I have no indication that inflation expectations are rising. We are seeing firms' expected wage growth moderating. We should not rule out any risk, but the economy is proving that the risk of stagflation to be less important, right? This is totally invalid. Totally invalid. But the major things that started coming about them switching their inflation targets, we started seeing selling occur from that as well. You go to about the beginning of the day, and we started to see some of the statements that were said in particular about this, and where we started to see some of the first signs of selling. It was right here. Fed Bowman, okay? Further interest rates are likely appropriate with inflation still too high. Continued risk of further increase with energy prices could reverse some of the recent progress from lowering inflation. This was the worst statement right there. So one thing that we're seeing the narrative change is now that energy is officially a problem, which again, the Fed, if you've paid attention, they have ignored, they have just disregarded all things energy. And now it's a problem to them. And they're saying not only is it a problem, but it can take away what's happened and all the good things that have happened with lowering inflation, which we've kind of already known. Okay, so those are things to consider. And obviously the market did not like that news. It did not. Okay, so a few things I'd be looking at and considering. Now, the first thing, let's go really quick to indicators. I want to pop these on real quick. I want to bring up the daily 200 SMA so you can see. Okay, so there's a few things we need to talk about. Okay. The S&P 500 SPY, okay, you're coming down into around support. I anticipate you're going to start finding support locally, this like 428 to 425, 426 region. You're going to have some support there. Now, after that level, if you start to lose that level, I'm not going to say you're going to come all the way down into 418, but that was a major inflection point. It's also worth considering the level that we lost today, that 431 level, 431.8. You can see the area of where we lost it. So I am kind of at the point to where I don't think this level is going to hold that well. I just don't think so. Especially if more news comes out around this and we just continue not to like this. So it's highly likely the target on this drawdown before we start seeing a real bounce or some aggressive buying is going to be around 418 on the SPY. Qs, it's kind of ugly as well. You know, you have to target around that same type of level, around 434. That's around 23 points of downside. Bring that down right there. It's still kind of tough to say as well. Again, you have some support basically into 347, 346, and then you're illiquid down to 338, 334. And that's kind of where you're looking at there as well. Now, in the newsletter this week, make sure you subscribe to that. Go to the website. You go up here, hover over this newsletter. It's absolutely free. You get our favorite stocks for the week. It's a bunch of free information. Over 4,000 readers right now. The number's growing every single week. But make sure you open that newsletter so you don't get unsubscribed from it. If you don't open the newsletter, you will be unsubscribed from it, just to let you know, because I pay out of pocket to make sure you guys have access to that. Believe it or not, it's not free to run a newsletter, and someone has to pay for it, and so I pay for it. It's not too expensive, but I try to save cost on where we can. Again, so that's where we're at now. Now, this is where things start to get interesting, and we're primarily looking at the charts today. I don't want to do too much fundamentals. I've given you a lot to think about there and why I do think we're bearish, okay? Now, again, congratulations if you traded semiconductors, but I don't believe we're done yet. You look at what's happening here on semis, and I think things are just getting started. So here was the lows that we were watching, around the 471. But then you get a little bit more interesting behavior, the lows from yesterday. And that's a perfect retest, ladies and gentlemen. Look at my lips. Because that's a barbecue chicken, right? Perfect retest, then rejection. Then you go look at some of the biggest semiconductor names, NVIDIA and AVGO in particular. NVIDIA, you had every opportunity in the book to get back into shorts if you wanted to, right? The 420, 421 level, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? 11 times 5, 55 minutes of retest and rejection on the day of 420, 421, right? That's like me in middle school with women, just rejected left and right. It was tough out there, right? We didn't get all the muscles until later on. So believe it or not. Then you put in a lower high, not good. You start to break down, very bad. And then you lose that 416, 417 level. It's all around bad. I'm looking for NVIDIA to get a test of 402, 403 range this coming week. Very aggressive like that, playing out there as well. AVGO, this is probably one of the better looking names, better looking plays that is kind of setting up really nice. AVGO didn't have a bad close. You're actually still pushing up here. Now, things to consider on AVGO. You had that really nice push down to our target of 800, 790-ish, give or take, right? That's good. That's delicioso. Mucho trabajar, mucho buenos nachos. We love it. Now, what you're looking for here. It's beautiful. You get that boom, and then we're looking for the retest. I'm going to draw it out for you, right? You guys like pictures, right? You guys like pictures. You got that drop, got that pop. Now we're looking for a move back down, right? Okay, so what we're looking for. You want to see a retest of around 840. We want to see a rejection from that point, selling happening on the Nasdaq. I'm going to tell you right now, if selling happens on the Nasdaq, you can probably bet the biggest names, top 5 names, which AVGO is the biggest semiconductor in there now. It might be. Is it bigger than NVIDIA in there? I know they raised it on the, it's top 2, right? Top 2 biggest names. Top 2 biggest semiconductor name in there, right? I'm telling you right now, it's probably going to follow. So you're looking for an 840 rejection, then pushing back down, gets pretty illiquid. Those are my favorite ones that I'm liking. I also entered some Apple puts on the 30K challenge to let you guys know. Everyone knows I bought some Apple shares at around 177-ish, give or take. And so we want to hedge that position. We sold some calls against this position at the top of the range this week, took some profits on those. But now we're looking to see the fall through here, and we are hedged for that, and we're protecting ourselves. So that's, again, the long-term side of the portfolio, the 30K challenge. I'll probably have an update on that on Twitter as well this week, so make sure you're looking out for that. Those are my favorite things I'm looking at there. Now, I want to run you through something really quick. We're going to run quickly through, draw you through the DXY, all the good stuff there, okay? And I think this is pretty important that we need to be watching this to get a viewpoint of the health of the market and what's happening here. Definitely been watching it a lot for myself. Now, some people are saying the dollar is going to dump. The barrel is going to dump. Now, I don't believe the barrel is going to dump. I don't. I'm going to tell you that right now. But the dollar is looking really good. Okay, so traditionally, what you would like to see, and I'd like to go to long-term viewpoints, especially on these fundamental things. Okay, so, and you're going to see this all over social media. we're coming into our target. We had like a 105.8 to 106 range. That was our target, right? We basically hit it, got rejected a little bit. Now we're coming back up. Now, the same thing happened back here. You came into 104.5, you rejected, you pushed down, you bounced the 200 SMA, you shot back up. When you have a target and you hit the target, typically you expect sellers to step in. That's why you have the target in the first place. Like if I have Apple stock and I'm targeting 182 and we're at 180 and we hit the target and I close my position, am I closing my position because I think we're just going to keep running? That doesn't make any logical sense. So I like to make sure we understand that first of all. So what happens here? We get into this range, we reject, we retest previous highs and we bounce. We see some selling yesterday and then it's absorbed today and we see a green day here on the DXY. Told you guys to look out for this. We saw the red yesterday. We saw the longer term yields do good, the 10 and 30. I said, watch out for the smaller yields and especially watch out for the dollar today. The dollar still looks resilient. Even with that upside that we had on the day, the dollar was looking bullish. Look at oil as well. You're still sitting in that range. Remember, we came into 92, 93, rejected, came back down. I still think oil is going to start tracking back to the upside. Now, the one thing that we didn't see today was the 2-5 perform that well. Now, I want to mention they're still above previous highs. Okay, previous highs right here. You can see clearly above it. You've pushed above. You're looking like you want to mount. You want to push up. I've already gone over all the upside. See, you're above. Clearly, you can see you're above. You're above. You're above. Very, very strong behavior. As you can see, you are above, actually sitting right on top of highs. And you get a little bit of a zoom in today, and this tells you all you need to see. You get below, buyers absorb it, push you back up, and you just remain right on highs. So again, all of the underlying indicators that point to me to be concerned with the market are still there. So I want to point out the dangers that are there. A lot of people are saying, you know, this is just going to get bought up, this, that. Now, I'm not saying to over leverage to the downside across the market. I'm not saying that. But I'm telling you right now, if you're long, if you're a bull, be cautious. At the very least, be cautious. You've heard my narrative. You've seen me be bullish. You've seen all this from me. Okay? I'm telling you right now, be very, very careful. I'm pretty bearish here, especially in the short term. Until data starts to perk up, until we see a little bit of the narrative change, we see oil dropping, there is no reason to be bullish here. None. There's zilch. Nada. Right? You have a down period between earnings. We have plenty of time till the next Fed meeting. I'm willing to bet heavy that the next CPI, PPI, PCE are not going to be good based on oil and where energy are and how they continue to run up. So that is my personal opinion. I'm looking heavily at semiconductors as the weakest names and the weakest sector and overall the best opportunity to make money to the downside. I want to give you one little tip though before I let you go. And you're probably going to watch, you'll see me on Monday. I'll have more videos. I'll have more content on Twitter as well. I'll have the educational video on the second channel. But listen to this. If you listen to anything, if you're looking to trade the upside, you're looking to trade the downside. I see a lot of people calling out random names, right? They're like, let's short Meta, right? When you're looking at this market right here, I want you to keep it very simple. Your goal, okay, is to preserve your capital and protect yourself first. That's your first goal. Despite what people think, the goal, make money. No, that's not actually the goal. The goal is to make sure my portfolio, the war chest stays filled, stays to the brim. And inevitably, by defending myself and putting myself in winning positions, I'll make money. Okay? But understand, when you're looking to trade the downside, attack the weakest sectors, right? Put it into war terms, right? That's why you look to flank, right? You want to go for the weak areas to gain an advantage, right? You don't want to go after the stronghold or the strongest area, just right against them, okay? So in everything, you want to find where you have an edge. Find where you can succeed better. And right now, that's why I've been hammering home the past 4 or 5 days, semiconductors, because they finally have been showing weakness. And apparently, go look at the comments from last video, people are doing pretty good shorting those, right? And giving you a little bit of a visual. Let's just quickly take a look. Gains and losses. They're cooking it up in here, boys. They're cooking it up, right? Can't fluff these gains, right? That's just people in Discord. So understand what's happening there. Understand how I'm attacking this market and what I'm looking for. I hope you got something out of this. A video will be coming on Monday, but tomorrow on the second channel, education video will be coming out. Have a good one, traders.